Welcome back. It's time for today's three-stock lunch. Jerry Castellini has our trades today. He's president and chief investment officer with Castleark Management. Jerry, welcome. Dow is down nearly 2,000 points in the last couple of weeks, so we've asked him to give us two names he'd buy and one to avoid at this juncture. So let's start with the big name of the day, which is Salesforce, down more than 20% after missing revenue expectations and that weak outlook. Jerry, is this one you think investors should pick up? Is it for sale or the beginning of a bigger downtrend?
We don't know, and that for that reason, we should avoid it. This one is being caught up in a big shift in cap spending in broad-based software and hardware at the enterprise level. And to see the beginning of a trend like this and to think this would be the turning point after just one quarter, I think that would be premature. Is this a great company? Absolutely. Truly one of the generational businesses that you've seen. But the company was built to grow. And for them to have to go through an experience now where their growth will slow or they might not have growth for some period of time, I just don't want to be around. I'll let this one play out and let others buy it.
So there's your avoid. Up next, though, we've got Applied Materials, the name you say to buy today. The stock slightly down today, but up about 10% over the past month. Why do you like Applied Materials, AMAT?
Yeah, so the opposite, really, of Salesforce is the visibility a company like Applied has. We clearly now are seeing a backlog of their swell with the rush to build and to meet the demand, not just in the next couple of years, but over the next 4 to 5, to build out the foundries to create this explosion in demand for compute power. And it includes not only that, but even at the data center level, the need for more memory is there. And when you combine those things with a business that's traditionally kind of constrained by the amount of machines they can build, this is going to give them a tailwind for profitability and visibility. And the key to this market right now is to having that. Again, the opposite of Salesforce is you can see even more clearly every day Applied's opportunity set, and it just keeps swelling now as people are more and more interested in this long-term view.
All right, let's move on to Intuitive Surgical, which is another name you say to buy, Jerry. The shares are up 20% this year. Why does this one jump out to you?
Yeah, this one hits their trifecta. There's 12,000 men pass through the age of 65 every day. 65 is that magical number that you have to start paying attention to the risk of prostate cancer. Prostate cancer solution is run through the Da Vinci machine that Intuitive Surgical has invented and has really closed out the market on. What's interesting about them right now is this is the first major upgrade in that product cycle, and it brings with it a whole turnover of all the hardware that's in the hospitals today. And the hospitals and docs just love this. And this is a very, very important upgrade for everyone that now has this risk factor. And you can expect to see their 30% margins probably going well into the 40% level. Again, a long tail to this upcycle. And in this kind of market where we're not sure about the economy, we're not sure about some of the disruption from the AI side, best to find names like this where you know you hope you're going to have a good visibility pattern.
All right, Jerry, thank you very much. Interesting. And that last one, very interesting indeed. We appreciate it.